Hello, traders. This is your trader's friend. Thank you for joining me today for another video. I'm so glad you could be here with me. Guys, today I would like to talk to you about my favorite trading technique and my moving stop losses. It's been a long time since I've shown you guys how it is that I enter a market and why it is that I enter the way that I do, or why it is I enter the market in the first place. One of the things that I'm looking for trades out of consolidation. So I like my moving averages to be close. And you can see here, oh, I'm sorry, before you have the Aussie USD on the 1 minute time frame. And you can see how you get this little mini fake out. It looks like, and I guess I can blow this up for you a little bit. Yes, let me blow that up. Okay, first you get what looks like this mini fake out here, and it is a mini fake out before price does what it's going to do. Now, this is the thing. What I look for in my moving averages and what I want to see in price is I want my candles anywhere between 2 and 4 candles to break either the support or resistance. In this case, it's resistance, so it only takes 3 candles to demolish this resistance. Where's my stop loss? Initially, my stop loss goes under the candle that breaks through that resistance. I enter here. Sometimes I wait for a pullback and a bounce before I enter, but I enter on this candle, and as long as initially the candle does not close below the candle before my entry candle, then I stay in that trade. And this was actually this morning with the Aussie USD. Let's shrink this a little bit and see how that works out as I move my stop losses. Now, when you're trading, you get this roller coaster up and down and up and down, and it makes it hard for you to know which way price is trending. Once you find, and you can see in hindsight what a beautiful trade this is, but one of the things, and this is a thing that I like to do on a good trade, and I switched to the 5 minute time frame. Let me get the right time frame. Okay, now here, that is where we entered on the 1 minute time frame, and you'll see, and this is how I actually move the stop losses. As long as I do not get a close below the previous candle, I continue to move my stop losses with the 5 minute time frame. Now, this is the thing that gets to be tricky, because you'll see initially how it comes back and forth. You can stop out of this candle any way you want, but you'll see as you continue to move your candle, you're not stopping below the previous candle, and you continue to move this up. As long as we don't get a close here, if we got, let's say for example with this candle, and I guess I should blow this up, you probably can't see it that well. Now here it looks like you are getting a reversal candle. However, you don't close below that initial entry point. If after that I'd gotten another candle to close below that, then I would have gone ahead and gotten out. So then at this point, you move your stop loss at the opening of that candle, and you continue to move up, and you move up, and you move up in different candles. Now you'll see here it gets really close. You get close to that stop out point. However, you do not close below the opening of this candle. If you close below the opening of this candle, you get out, and you continue to move your stop losses up accordingly. And let's just kind of speed this process up until you get to this point where you get a valid reversal, and bam, this is your stop out point. So this is where you get stopped out, because now you've moved that here, or even if you keep it here at this mother candle, you still get stopped out. So at this point, it's time to exit that market. Let's take a look at this on my favorite pair as well. Okay, now you have before you the Euro USD on the 5 minute and the Euro USD on the 1 minute time frame. And this was last night's trading again. And you can see the very same thing that I was talking about in that Aussie dollar pair. You have the same thing going on in this Euro USD. Now, this is the thing. I'll tell you the thing that helped my trading more than anything. It was learning to cut a bad trade quickly. You have no idea how the market beat me up and kicked my butt before I got that. If there's anything I would give to every trader as a gift, it would be to learn to cut bad trades quickly. Now, I've blown this up for you some, and you can see how it is that you could have missed that. Because before, look at the price action. It's just junky. It's just junky. It's just junky. And this is one of the things that the 5-minute time frame does for me, and I'll show you that in a minute. But you'll see that it only took 2 candles. Look at the closeness in my moving averages, and you can see how these moving averages are making sense as we move along. But it took 2 candles to cream that support. Now this is, and this one, and your initial, and I'm sorry, my laptop is getting hot, but you can see that this is your stop loss, and it gets close there for a minute. However, it is never challenged. Yes, I like to keep stop losses. I've heard people say your stop losses are way too tight. I love tight stop losses because I hate to lose money. So you can see as we continue to progress in this, you get this kind of bouncy up and down. Same as you did with the Aussie dollar pair before it took off into a nice trade setup. Let me show you that on the 5-minute time frame. Okay, on the 5-minute time frame, this is that same choppy area, and you can see it looks like we are going bearish. And prior to that, we were in a bearish trend. However, it was time for a trend change, and you can see that's what that area is. This was, for me, the resistance and support level of that first area, and this is like resistance point 2 and support level 2 before price took off. And what is it that I'm looking for when I'm looking for a trending market? First of all, I'm looking for a trending market. I don't want to trade this, so this is what I want to stay out of. But I am looking for a candlestick that's strong enough to pull the trend. I'm looking for that kind of breakout candle with the bravado to bend the trend in the way that I want it. Once you get, and I like to get in on the beginning of a trend if I can, but once you get that trending candle, you want to stay in the market. Now, there are other places that you can enter. If you enter in late on the trend, you can enter in on these little dips with reversal candles, dip reversal candles, and you can get in the trend that way. I just prefer to get in on the beginning of a trend. It just makes me feel more confident. Now, once we change this over to candlesticks, you can see this a little bit better. But I actually took a little short on this one. I think I got, what was I, in about 2 positions, so I got maybe 22 pips or something. I don't know. But I noticed that price wasn't really going anywhere, so it was the bounce off the resistance, hitting support, that kind of thing. It's like, okay, range bound market. I just wanted to play though. But at any rate, when you see that price is no longer doing what you thought, go ahead and cut your trades quickly. Now, same thing here. Let's add a new trending line so I can show you. Okay, as price continues to progress, you want to move that stop loss, and I'm just going to make this quick. Now, you get into this situation where you have this mother candle, and you have her little babies in the park, and they're kind of running everywhere. But this is the thing. You want to wait that if you don't get stopped out, well, it's up to you. But if I don't get stopped out, I want to go ahead and stay in that trade. Why? Because eventually she's going to gather them back up together, put them all in the car, and they are going to continue on their journey. Here you have a situation where you got stopped out, but then you got the re-break back above. And I'm sorry, this is the 10 SMA on the 5-minute time frame. So you got the re-break, and you can see how they continued to go on their journey in a very strong fashion. Here you have again where they stopped at the park, kids got out and played, mother gathered them again, and they were back on their way. So I am looking to trade a trending market. I also need to tell you um, the moving averages on the 1 minute time frame as well. But you can see that we switched trends, and I went to bed. I left an arrow um, where it was that I left off. I took a short on this for 20 pips and went to bed because I figured a move that strong up, this is about 140 pips, a move that strong up, I could certainly get 20 pips on the correction. And you can see that, laugh out loud, it and I'd even said I'm not going to trade the New York session simply because I didn't expect that many pips out of it. So I got 20 pips on the correction in this pair. Now I saw this breaking down, but it was a little bit junky. So you can see this is where I left my arrow. I put my take profit in for 20 pips, and I went on to sleep. And you can see what continued to happen in this pair. You got this breakdown, and this is the price action that I don't enter because it's just junky. I don't like that. I don't like that. I don't like it until my moving averages start to smooth out. You can see we're already in a bearish trend now. I did not get in on this price action, but this is more of what I'm looking for. I don't like junky price action. It scares me, and I like to be confident in the trades that I take. I did say that I was going to explain the moving averages to you. And again, let me show you this. Let me blow this up before I go into the moving averages. Okay, again, this is what I'm looking for on an entry. And this is the blown up price action going the other way. You can see how you get this candle that just kind of creams through everything. All of um, the lower moving averages. I'm sorry, I lost my chain of thought for a minute. But before you, you have this thick black line, which is the 200 SMA. The red line is the 50 SMA. The white line is the 20 SMA. And the blue line is the 10 SMA. Okay, we're going to take a look at a pair that's a little bit harder to trade, the Euro JPY on the 1 minute time frame. If you're doing this on the 1 minute time frame, you can see this nice entry here, but then you get a break back. If you're in on the 50, out on the 50, you're fine. You can either do that or move your stop losses. That way you're going to be sure to lock in some profits. And if price goes the other way, go ahead and stop yourself quickly. Listen, guys, it is better to be tricked than to be broke. They're going to trick you. This is a tricking game. This is the way this works. And I know I hate to lose money more than anybody, and I get so mad at them sometimes. But if you have to curse at your screen, go kick your shoe or whatever, don't let them trap you. Do not let them trap you. I cannot stress that enough. But if you do in on the 50, out on the 50, then you can see that you're fine. Once you get a good ride, guys, go ahead and stay out. And don't enter this. Don't enter this. Don't enter this because you're going to get stopped out. Don't enter choppy price action. I mean, you can scalp it, of course. If you're scalping, doing the 10 scalping trade, then you can do that. If you're just scalping off of the 10 SMA. But you can see that this price action is kind of junky, and if you don't move your stop losses or either have a method like in on the 50, out on the 50, chances are in this pair a lot of times you're going to get stopped out. Let's take a look at an instance where you definitely would have gotten stopped out. Now this was this morning's trading. If you left your stop loss there without trailing it, then guess what? You got stopped out in this pair before it kind of took a junky bullish trend. But you definitely would have got stopped out on this pair. If you got in on the 200, left that there, um, left your stop loss there, you got stopped out before price continued to go in a kind of junky, bullish fashion. But guys, that's the importance of your trailing stop losses, or either a method like in on the 50, out on the 50. That way you're going to be sure to lock in some profit. You do not want to lose money in the market. You don't want to lose money to the market. Guys, just want to remind you that you can absolutely do this. You can be successful at Forex. If there was something that I explained in this video that I didn't make clear, please ask me. I have no secrets. If I know it, I will tell you. Have a terrific weekend.